Welcome to Markets Now. I'm Michelle Rook with Beadle Paradigm Futures. Well, livestock futures to the plus side this morning. The grain trade is mixed, but has been trying to bounce here. I think wheat is to the plus side, but we've already seen some two-sided trade in both of the row crop sectors. And Kent, boy, a tough down day yesterday in the grains, new lows for the move in much of the complex here. And we really got overdone to the downside. So we're due for a bounce here, aren't we?
And we're due for a bounce, but in order to get that bounce, we really need to have, a break from the speculative selling that we've had. We believe that's been very substantial here over the last week. And in addition to that, of course, we still had the, ongoing pricing going on in the country of July basis contracts. That should be winding down here today or tomorrow. But we've got rain in the forecast, or at least above normal precipitation in the forecast on the 6 to 10 and the 8 to 14 day. And the speculative side of this market looks at that and says, hey, everything is fine in the Eastern Belt. They're going to get the rain they need. And, they also tend to believe that from a stocks to use ratio basis, that corn prices are still overpriced because they're making comparisons to, that 2014 to 2019 time period when, prices were still significantly lower than here.
Yeah. And that weather, the rain that you talk about in the Eastern Corn Belt, that really is trumping some of the problems that we're seeing with flooding in the Northwestern Corn Belt and some acre losses there, right?
Oh, we're going to have acreage losses, and we're going to have ongoing issues from acres that see waters recede, but likely had reasonable stands and have the ability to come out of this. You're certainly going to have a fair amount of nitrogen leaching. You're going to have compaction. You're going to have weed issues. In an environment where it's going to be tough to get in there and spray because it's going to take a long time for some of these areas to dry out. So, it's yield impacting for sure. The market tends to, go with, two old adages. One, rain makes grain, and the second, there's two hills for every valley, that sort of thing. But I was on the road this week. I was through southern Minnesota all the way to the South Dakota border, and there are significant issues. And those issues are actually kind of growing because the water had to go someplace, and so you're now seeing downstream issues where you've got dam breaches, you've got flooding, on the Missouri, and frankly, we've got a lot more rain in the forecast on the 5-7 day period for much of Iowa, and that's where a lot of this water is starting to flow. So I'm not even sure we're out of the woods with this situation yet.
No. And is there an impact with flooding? I know we've had some rail taken out. Is there an impact on ethanol production or soy crush?
Both. I'm aware that one of the processors in Mankato has shut down here briefly. Don't know how long that's going to be. I've heard of an ethanol plant in Northwest Iowa that has had to shut down. So this will have some impact on the grind going forward, at least temporarily. Those types of things tend to not last very long. And I do believe that we've got, both capacity and availability of grain in order to ramp those crushes and grinds back up a little bit to catch up.
You bet. So we're also running into end of the month, end of the quarter, and we've got these big reports coming on Friday. And there seems to be kind of a bearish bias going into those reports, especially on the stock side, right? We're looking at a big build.
Well, we are going to have a build year over year. That is a function of last year's production, and the ending stocks are obviously both forecast in corn and soybeans to be higher than a year ago. So you would expect that we will have a build. What's interesting about the expectations is that the cash markets aren't necessarily saying that we have that much overhang of supply. We're watching the July-August soybean spread trade at over 20 cents a bushel today for the first time. That's a 20-cent inverse. We saw the situation during the Goldman roll, which is normally very bearish. The corn spreads, we actually saw the July SIP corn spread come into a penny. It's still trading around 5 cents through the pricing of all these basis contracts. And we've got corn basis levels themselves printed new seasonal highs here yesterday at something around 13 under the July. So I think that frankly, I think that the marketplace might be surprised about that corn stocks number. I point to some evidence that the ethanol grind has found a little less productivity in this year's corn crop. It takes a little bit more corn to get that same gallon of ethanol. And then, of course, on the cattle side, we've been feeding these steers out significantly heavier, partially to offset for fewer numbers, and partially because you've got high cattle prices and very cheap corn, and it makes sense to try to get that extra meat by feeding these cattle out bigger.
I don't disagree with you. The basis levels and the spreads are telling a different story than what we're seeing. But I guess the key is whether we're going to actually get it in this report, if it's going to be printed or not. That'll be the question. Acreage, lots of questions about that. But when you look at the average trade guesses, they don't look like that they're that far from what we saw in March. Is that something that we could really get a big surprise on too?
Well, you can always get a surprise on the acreage. All right. Right now, the trade is looking for a combined increase in wheat plus corn plus soybean acres of about 800,000, maybe close to 900,000. And, could that happen? Sure. Absolutely. That could happen. But keep two things in mind. Number one, prices this spring have been on the decline, and we did not have any major rally during planting season to give people a lot of optimism for profitability. And in fact, this winter's projections from the University of Illinois were for a central Illinois producer to lose $100 an acre in corn. Okay. The second thing is the pace of planting, and oftentimes you get a very quick planting progress. You get a lot of corn planted in April, and you're still able to go in early May. Well, then you sometimes get more corn acres. Now, some folks think we're going to get more bean acres because it didn't work out that way. But my thought is that we're going to have instead more PP acres in the northwest part of the belt. And that we just took some marginal acres out of production, which we often do, because profitability for the American farmer just wasn't there this spring.
Yeah. Cattle market, let's move over there. New highs for the move again this morning. And is that a function of the market anticipating record cash again, or the futures just trying to catch up, or both?
Both. I think that, the cash calls this week are steady better. We were better last week. Frankly, the Southern Plains still has some catching up to do to the trade in the north. We've actually had, average sales prices make new records. We've got new record cutouts. It's been a very, very strong cash market that, again, is incenting these heavier weights. But we're short some numbers. And, technically, if you think about what we did on Monday with that big placements number and still managing to rally the cattle, granted, we took a breather yesterday, but the market still feels too cheap, and, it's getting good, solid buying here again today.
Yeah, you're not worried about any big end of the month, end of the quarter profit taking?
That could always happen. I think that any dips in the cattle market are going to find very solid support from traders.
And hogs up this morning. We're into end of month and end of the quarter, and we had new contract lows yesterday. So is this just some short covering, you think?
And well, obviously the cash markets in hogs have been a different story, right? And we've essentially been trading, cash hogs sideways. We've traded the CME index sideways now for weeks. and we had priced in a very solid, summertime peak, maybe near $100 in both June and July futures, and obviously the market just couldn't get it done. With 4.5% to 5%, higher slaughter on a weekly basis. That's just an awful lot of meat for the market to absorb, and that's why that's why the cash market is steady and the futures market has just been forced to come down to the cash.
Expectations here on the hogs and pigs report tomorrow?
Well, I'd be hard pressed not to expect further gains in productivity, because we've been getting them almost monthly or quarterly, I should say. And all things being equal, the way the markets have acted, you would almost expect to see a few more hogs in that report than what maybe traders are anticipating.
We'll see what we get tomorrow. Thanks so much for joining us, Kent Beadle with Paradigm Futures. Remember, futures and options have substantial risk. This is Markets Now.